Minasan, konnichiwa, Zamurai Engineer desu. Let's take a look at Lesson 7, recording purchases and sales under the other type of inventory system, which is called periodic. We already discussed what is perpetual. So let us take a look. Determining cost of goods sold under periodic system. Okay. No running account of changes in inventory. We have a beginning and so ending inventory determined by physical counting. Okay. Cost of goods sold not determined until the end of the period. We still have to compute the cost of goods sold, but at the end, at the far end. So just running the account. Okay. So for example, we have here periodic system cost of goods sold. Okay. Cost of goods sold account inventory January 1. So purchases, less purchase returns and allowances, purchase discount, net purchases, add the freight in. So freight in is included in the cost of goods. Okay, cost of goods purchase, cost of goods available for sale. Okay, so cost of goods available for sale is equal to cost of goods purchased from this accounting period plus the beginning inventory. Okay, so that is the cost of goods available for sale. Okay, and what about cost of goods purchased? That is what? Net purchases plus freight in. Right? So how about net purchases? That is purchases less purchase returns, allowances, and purchase discount. So that is how it works. And cost of goods sold available for sale. Okay. Less inventory. So ending inventory. So we have cost of goods sold computation. This is total, and we can do it per piece because we already counted the inventory at the end of the year. So we can compute the per unit pieces. Okay, so this is how we record merchandise transaction. Record revenues when sales are made. Do not record cost of merchandise sold on the date of sale. Okay. We just record all the sales as they are made, but we do not record the cost of merchandise sold on the date of sale. Okay. Physical inventory count determines cost of merchandise on hand and cost of merchandise sold during the period. Now, because you counted and you know the initial number, so you can find out the cost of merchandise sold during the period. Record purchases in purchase account. Okay. Purchase returns and allowances, purchase discounts, and freight cost are recorded in separate accounts. Okay. So we have account names, allowances, purchase returns and allowances, purchase discounts, and freight cost. So there are 3 separate accounts. Okay. So let us have an example on the basis of sales invoice and receipt of merchandise offered from our previous example. So we have to have this accounting record. Purchases 3,800, accounts payable 3,800. This is how we record it. If South pays public private company 150 for freight charges on each purchase from PW or supply, the entry would look like this. Freight in, transportation in, cash 150. Okay, so we have an account for freight in rather than go to the what? the inventory directly. Okay? Accounts payable and purchase returns allowances. If the company returns goods, okay, so we have this accounts payable becomes lesser, so purchase returns and allowances. Okay. Another example for recording purchases of merchandise or purchase discount, accounts payable and purchase discount, cash. We have, and recording sales of merchandise, okay. Accounts receivable, sales revenue. No entry is recorded for cost of goods sold. Okay. That is for computation. Cost of goods sold is for computation at the end of the accounting period. So sales returns and allowances, just use the sales return and allowances account name and accounts receivable. So you have more direct illustration. So this is I think more easier, no? So cash and sales discount, account receivable. So straightforward examples. Okay. Recording sales of merchandise, comparison of entries between perpetual inventory system and periodic inventory system. So transaction by transaction comparison. Okay. Look, they use inventory more. So we are always using inventory account name. Then in the periodic, we have several other account names. Okay. Okay. Again, recording sales of merchandise, comparison of entries. Continued. Okay. So those red affects the new accounts names. Cost of goods sold, inventory. Those are the differences. Okay. So return. There are returns. No need to to record because later on you will count physically. No need. No need. Huh? So also on what? Uh, Cost of goods sold. No need to record per transaction basis. Then use worksheet. Using worksheet. Take a look. Using worksheet with periodic type of inventory system. So we have what? Inventory, then sales revenue, sales returns and allowances, sales discount, purchases, purchase returns and allowances, purchase discount, writing. So there are more account names added here rather than on the perpetual system. Okay, so please try to do it, simulate this one. You can do this recording as an exercise. We already have an answer, but you can do it. Write it down one by one and understand it. Not just write without knowing anything. Writing is a skill, but we don't need to do it on this one because we need what? We need understanding. Worksheet is different from our regular 9-step accounting process. Okay, so please try to have a practice, and we will have practice on our live lectures on this. Okay, so again, this is Dr. AP preaching engineering for nation building.